nerds, my name's Anthony, and at the end of this video, I polled you guys and I asked you which DeFi project you'd like to learn about, and one of the ones that I saw multiple responses on was Aave. So that's exactly what we're going to cover today. We are going to go over the basics of what Aave is, then we'll talk about how basic lending and borrowing works, because there is a lot to it. It is a very comprehensive protocol. So, a lot of people talk about DeFi and it's become a bit of a trendy word, like kind of a buzzword. But, in this case, it is that big of a deal. So I'm starting to research it heavily myself. Let me know in the comment section if you'd like me to make more DeFi review videos. Give the video a like if you enjoy this type of content. But today we're going to dive into the number 5 DeFi project, which is Aave. And here's the other thing I want you to understand about Aave and the gains that have been realized this year. Over the course of the last year, we are up 6,591%. That is ridiculous. That is very, very rare in traditional markets, but this is the type of stuff that we're in crypto for, these types of gains. This is the biggest trend in crypto, so let's get into it and explain what Aave is for everyone who doesn't know. Aave is a decentralized, non-custodial money market protocol where users can participate as depositors or borrowers. Okay, so you can do either or. Depositors provide liquidity to the market to earn a passive income, while borrowers are able to borrow in an over-collateralized, perpetually or under-collateralized, one-block liquidity fashion. The protocol is implemented as a set of smart contracts on top of the Ethereum blockchain, which we know. Smart contracts guarantee safety and do not require a middleman. Okay, so one thing I want to just pause and say to you here is that there is no KYC, there is no know your customer or no anti-money laundering, because these are decentralized platforms. So while that may be a little scary, it's also a beautiful thing because you don't have to go through a lengthy loan process. You don't have to show your credit score in order to get a loan. Again, that's both scary and amazing, but no matter which way you look at it, you have to admit it is revolutionary. The Aave protocol is developed with security as a priority, having been audited by multiple auditors. So here are a few other facts that you should know if you're considering either investing in or in some way, shape, or form getting involved with the Aave protocol. We already know that it's a lending protocol that enables people to either lend or borrow, but we didn't talk about how you could do this with a diverse range of cryptocurrencies. So most recently they added Engine Coin, right? You can use pretty much any of the DeFi projects you can think of, as well as a bunch of stable coins. You can use Basic Attention Token, Binance USD, DAI, right? All these different tokens are compatible. And then the other thing that's interesting here is you could use either stable or variable interest rates. Now, I'm not going to get deep into that on this video, but it is something you should look into if you end up using Aave. In addition to the typical features seen on protocols like Compound, which is another popular DeFi app, Aave includes notable distinguishing features such as uncollateralized loans, rate switching, flash loans, and unique collateral types. Now let's talk about Lend itself. Aave leverages a native token, Lend, that provides holders with discounted fees, right? So if you're making transactions, you'll have some sort of discounted fee. In the near future, Lend will also be staked for governance, so it can be used for people to have a say when large-scale changes or small changes are made to the protocol as things adjust over time. And Lend can also be used as a first line of defense for outstanding loans, right? So people who default on their loans. Next, what I'd like to do is just give you a basic understanding of how borrowing and lending works on the platform. So Aave lending rates. Now, when you deposit your cryptocurrency onto the Aave platform, you are essentially providing liquidity for borrowers to use. And what'll happen is you'll put that money in, other people will take it out in the form of whatever cryptocurrency they'd like that's available to them. And then in your account, you'll see these A tokens. And Aave interest-bearing tokens, A tokens for short, are minted upon deposit and burned when redeemed. The A tokens are pegged 1-to-1 to the value of the underlying asset that's deposited in Aave protocol. A tokens such as ADAI, which is the DAI stablecoin, can be freely stored, transferred, and traded. While the underlying asset is loaned out to borrowers, A tokens accrue interest in real time directly in your wallet. Seriously, you can watch your balance grow every minute. We are in a world where we are seeing historically low interest rates, right? I'm in America. You guys all know by now, if you've watched my channel, that I'm in New York. And our interest rates are literally near zero, and they could literally go negative. As an investor or as an account holder, let's just say, on a bank account, you're earning next to nothing on your accounts, on your checking or savings accounts. So this is a high yield alternative to that. Am I suggesting you should take a large portion of your money and put it in here? No, I'm not. I'm not a financial advisor. I'm not suggesting or recommending anyway. I'm just sharing what is potentially possible, and you guys can do more research and make your own decisions from there. But these are the interest rates that are currently being paid through Aave. So if you were to put your money into Aave and let's say into the DAI stablecoin, right, you could potentially earn 6% annual interest. So $100 turns into $106 over the course of a year. That doesn't sound crazy or astronomical, but trust me, it's way better than anything you're getting from traditional banks at this moment in history. Next, I want to talk to you a little bit about how borrowing works and the specific advantages of borrowing on a platform like Aave as opposed to taking out some sort of loan in a traditional finance market, right? So why would I borrow instead of selling my assets? Selling your assets means closing your position on that particular asset. Hence, if you're long on the asset, meaning you're hoping the price will go up and you'd like to hold it long term, you would not be entitled to the potential upside value gain. But by borrowing, you are able to obtain liquidity to invest in something else for whatever reason you want without selling your assets. So if I borrow on Aave, I still have that long position. So let's say I'm invested in, I don't know, Compound, and I believe the value of that will go up. If I borrow against that, my Compound position still exists. So if Compound goes up in value, I am still able to realize, to take those profits. That doesn't happen when you close your position on an asset. Users are borrowing mainly for unexpected expenses if you have some sort of emergency in your life, leveraging their holdings, like if you're doing, I think, yield farming, let me know in the comment section if that's what that would be for, or for new investment opportunities. Let's say you just want to invest in another project, another cryptocurrency, you want to take a chance on it, but you don't want to necessarily take your money out of, let's just say, Compound, because that's the example we used before. So really some fascinating stuff on the borrowing side in Aave. If you're using Aave already, please let everyone know in the comments section how you're using it. Let's communicate with each other and let's learn from each other. That's one of the reasons that this channel exists. Also, if you're still with me right now, please consider subscribing to the channel. Right, on this channel, we make crypto news videos, technical analysis videos, and like you're seeing here, crypto project review videos. And I always say, if you're passionate about incorporating speculative investments like cryptocurrency into your overall wealth building strategy, then this is the channel for you. So consider subscribing, smash the like button if you're enjoying the content, because it does really help us grow. But how do you borrow? So before borrowing, you need to deposit any asset to be used as collateral. So you do need collateral to borrow. But essentially, once you borrow against that collateral, you can have twice as much money, right? Twice as much cryptocurrency as you would have had. Hopefully, this video has opened your eyes to the potential of some of these revolutionary, and I can't stress that enough, these revolutionary DeFi apps that are being built on Ethereum. As always, I want to remind you to never invest more than you can afford to lose in cryptocurrency and to enjoy the ride. Thanks, and I'll see you in the next one.